What makes super, super? At Vision Super, we do it every day. Our focus is always our members, and we never forget it's their money we're investing for their future. But we believe for super to be truly super, it also needs to have a positive impact on the planet. As an industry super fund, we strive for outstanding performance while keeping our fees and costs always low. And as Victoria's oldest community fund, we've learnt that investing smartly for a better, more sustainable future doesn't mean compromising on delivering excellent returns. Proudly, we have the awards to prove it, from most sustainable super to best of the best. High performance, sustainable, low cost and awarded. It's by delivering on these promises that we know we're ensuring members have more money at retirement, and we're contributing to a better future for all. That's why Vision Super is super that's actually super.
Well, good afternoon, and thank you for logging on to Vision Super's 2020 annual member meeting. My name is Sean Ellis, and I'm the General Manager of Strategy and Growth here at Vision Super. Before I hand over to our chair to commence this evening's session, I'd like to go through just a little bit of housekeeping. In attendance tonight, we have all of Vision Super's directors, as well as a number of Vision Super executive. We have John McDonald from Ernst & EY is the fund auditor. We also have Matthew Burgess with us, who's the fund actuary. All will be available to take questions at the end of today's session. I'd also like to let you know that tonight's session is a general information session only. We won't be taking personal questions because we cannot provide personal advice in this forum. If you'd like to get personal advice, please contact our contact centre during the week and the team will be able to help you with any of your questions. You'll see here from our agenda, you'll be hearing from Jeff Lake, the chair of the fund. We'll be doing a welcome and providing an update on the fund. You'll also hear from the chair of each of our committees, as well as Stephen Rowe, our CEO, and Michael Vish, our Chief Investment Officer. Thank you very much again for logging in. I'll hand over to Jeff Lake now to commence proceedings.
Thanks, Sean. On behalf of everyone participating in tonight's annual member meeting, I'd like to begin by acknowledging the traditional owners of the lands across Australia. We pay our respects to elders past, present and emerging, for they hold the memories, the traditions, the culture and hopes of Aboriginal and Torres Strait Islander peoples across the country. Well, on behalf of the Vision Board, I'd like to welcome everybody here tonight. Other super funds are having their first annual member meeting this year, and we're quite proud that this is our sixth one. Now, usually we have the opportunity to talk to each other in person before and after the event. And of course, this year things are a little bit different. But nonetheless, we'll do our best in this virtual forum to be as informative and transparent as possible for the next hour and a half. Being a director or an employee of a member-owned organisation like Vision Super is both a privilege as well as a position of significant trust. We're responsible for managing billions of dollars of your hard-earned retirement savings and doing so in your best interests. And every one of us takes that responsibility incredibly seriously. As a board, we look at every decision that we make from the perspective of our members, and our view of your perspective is central to everything that we do. Vision Super isn't the biggest super fund in the country, but we do continue to deliver strong, risk-adjusted returns at a very reasonable cost. And more than that, we prioritise ESG, that's environmental, social and governance factors, into our investment process. And in doing so, we aim to protect the environment and people and communities at the same time. Not many super funds have genuinely adopted that same broader risk focus and focus on ESG as what we have adopted. Now, there continues to be a lot of focus on superannuation in the media and in policy debate. The recommendations from the Financial Services Royal Commission continue to reverberate and be implemented, with a number of retail funds driven out of business over the last 1 to 2 years. This is also driving merger impetus in the industry fund space. Sunsuper and QSuper are in merger talks to create a $190 billion superannuation fund. And Vic Super recently merged with First State Super to create a $120 billion fund. And there's also a number of other funds that have merged or which are involved in merger conversations. At Vision Super, we have identified some merger options and we remain keen to grow via merger, but our core requirement for a merger is very clear, and that is our members must be in a better financial position post-merger for us to want to proceed down that path any further. In the meantime, we continue to strive for the best possible investment returns we can achieve and at the lowest possible cost. This key goal and our overall strategy positions Vision Super to deliver our promise to members now and into the future, regardless of whether a merger opportunity eventuates. On behalf of the Vision Board, I'm pleased to present our 2020 report card. We are confident that we have the right management and staff group to deliver again for you over the next 12 months to build on the successes of the last 12 months. The makeup of our board, I'm pleased, has been very stable in recent years. I want to acknowledge Rob Spence, who retired from our board and is a former chair after 14 years of outstanding service on our board. He finished at the end of last year. And we're really pleased to welcome Rob's replacement, Kerry Thompson, nominated by the Municipal Association of Victoria. Kerry is the Chief Executive Officer of the MAV, and she's already making a big contribution on our board, just like Rob did, and bringing her extensive experience in local and state government to the Vision Super board table. Last year, I told you that the board was pleased to have achieved a 5-4 gender split. That was 5 men and 4 women. Well, this year with Kerry's appointment, I'm pleased to say that we are one of the very few superannuation funds or top ASX 200 boards to have a majority of women on our board. I'd like to introduce you to our 9 board members who, as Sean said earlier, are all here tonight and participating in tonight's meeting. First of all, Lisa Darmanin, who is our Deputy Chair and who's the State Secretary of the Australian Services Union here in Victoria. The 3 other directors who are nominated by the ASU, Casey Nunn, Di Smith and Peter Gebbett, all of whom have a close connection to members, to Vision members and to local government and the industries that we cover. Peter Wilson, a former chair of our fund, is nominated by Vic Water. And Peter comes from, one part of his background is in the water industry. Graham Sherry is nominated by the Victorian Chamber of Commerce. And Graham brings a wealth of experience from the law, as well as from the board of what was VECI, what is now the Victorian Chamber of Commerce. And finally, Jo Dawson, our 9th an independent director. Jo's appointed by our board and she's appointed on the basis of her financial experience and investment background. Collectively, our director group is highly qualified and importantly is a diverse group and a group that is very well connected with the particularly the member base and the employer base of the core industries that Vision Super has traditionally covered across local government and water, but also other areas that we're now continuing to grow into. I want to say a few things about COVID. In saying this, I want to acknowledge that many of our members have been impacted significantly, as have all Victorians and all Australians and everyone in the world, by the global pandemic since March. It's been our top priority from the beginning to keep our staff safe and to protect members' retirement savings through these troubling times. Unlike many organisations, we've had no interruptions to our usual operations, which is a real credit to our staff. Our Chief Executive Officer, Stephen Rowe, managed a rapid and successful transition to 100% of all our staff working from home, even our call centre. And while we haven't been able to provide our normal face-to-face service to members in the past few months, we have continued to answer a huge number of calls, emails and online inquiries. And we're really pleased that right through this period, member satisfaction has remained at an all-time high for us. It's been great that that's been the case through these very challenging times. On the investments front, we monitored market movements closely, and we met with our investments team and advisors on a regular basis, particularly when markets were significantly fluctuating back in March and April earlier this year. With an increased focus on asset allocation as we navigated these difficult times, we're pleased that returns for our default option and most of our other options have remained positive across the year. Now, before I hand over to our Chief Executive Officer, Stephen Rowe, to provide a more detailed report on Vision's operational and investment performance over the past 12 months, I just want to let you know how things will proceed tonight. Following Stephen, we have short reports from each of our committee chairs and also from our Chief Investment Officer. Last year, you told us that you wanted to have the opportunity to interact with your board. So we are all here and able to respond to your questions, which will follow tonight's short presentations. I also want to take this opportunity to thank the entire Vision staff group. Many of them are here tonight, also participating in this annual member meeting tonight. Vision Super's 105 staff all played a critically important role in delivering the results that we are presenting tonight, results which will mean a better retirement for all of our members. I want to thank each and every one of them for an outstanding 2020, despite its challenges, and I look forward to building on these successes next year. Finally, as I said, we'll have the opportunity for questions at the end, but you can submit these at any time. We're going to get through as many questions as we can, and any questions that we can't answer this evening, we'll get responses to you through the minutes of this meeting, which will be available on our website in the next few weeks. We also asked for questions in advance of tonight's meeting. We received a number of those from members, and many of those questions will be answered in the presentations that you'll be seeing tonight. So without further ado, I'd now like to hand over to Stephen Rowe, the Vision Super Chief Executive Officer. Thanks very much.
Thanks very much, Jeff, for that introduction. Much appreciated. Good evening, everybody. I'm really pleased to be able to present another annual members meeting. As Jeff said, this is our 6th forum of this kind. I'll start with a few facts and figures. Try and make sure I get this clicker right this year. In terms of funds, contributions in, expenses, in spite of the pandemic, we've managed to bring in $269 million in investment income. We brought in just under $500 million worth of contributions from members and employers. We paid members around about $420 million in pensions and lump sums. In terms of transfers in and transfers out, that was slightly out of balance this year, unfortunately. But overall, as I said, we grew funds in a very difficult year. In terms of our operating income and expenses, they were pretty much in balance. We spent around about $25 million and raised about $25.3 million in member fees. And I'll take you through some more detail on that in a few minutes. Okay, I'll get my clicker back. And I'll just now give you a few facts and figures around our membership and funds under management and average balances. As you can see, the vast bulk of our members are in the accumulation options. That's 84%. We have 9% of our members in defined benefit products and 6% in pension products. The vast bulk of money is in accumulation, in the accumulation pot, it's 59%, but we've got 22% in defined benefit money and 17% in pensions. And pound for pound, we've got one of the biggest pension options in the country for our size. As you can see on the slide to the right there, average member balances have increased quite nicely since 2016, up from 80 odd thousand to 120,000. So quite a nice rate of growth there, and really a reflection of quite solid markets up until March this year. The next slide, it would really help if my phone wouldn't go dead on me, but I think I'm there now. The next slide really shows you our growth over the 73-year journey. Quite pronounced growth since 2010-11, coming up from sort of $4 billion through, as I said, to $10.5 billion. The next slide is quite a dense slide, hoping to get you to it. Yeah, it's building. I'll just take you through a few bits and pieces here, some most pertinent facts as I see it. We do track member and employer satisfaction, and our results in the last 12 months have been above target. In terms of employee engagement, the last time we ran a survey was in 2019, but it was 74%. We're aiming to get to 80%. So there's a bit more work to do there, but it was quite a bit lower than that 5 years ago. In terms of funds under management, we did get to $11 billion earlier this year before the pandemic. But as a result of the pandemic, some of that momentum was lost. Active membership growth is pretty strong, but frankly, that's quite an exaggerated result because we did have to clear, like just about every other super fund in the country, members that are inactive members to the ATO. So it made our active, percentage look stronger than it actually was. In terms of retirement growth, again, slightly disappointing, but we expect our pension join online facility to see a lot more momentum on that front in the next 2 years. Member density is good. Our member operating ratios, investment and operating, are really strong and in fact lower than target. And our top quartile investment performance is there for you as well. And I'll take you through some more detail on investment performance in the next couple of minutes. Okay. We will leave all these slides up on the web as well, so people can take a bit more time, going through them. I'm just clicking on the clicker then, but can't get it to click to the next slide. I've done it. Sorry about that. But we've had 10 strong years. We've got this data from Super Ratings, the main sort of rating house for superannuation funds. And this shows our ranking over the last 10 years against the top 50 funds. There are around about 170 funds in the market, but the top 50 is what we're concerned about. So if you look at the 1 year number up to the end of June for the MySuper Balanced Growth option, where the vast majority of our members are invested, we achieved a 1.96% return last year, which was a good deal better than the industry average, which was negative. And it meant we were ranked third out of the top 50 funds for investment performance for the last year. As you can see on the table there, over 3 years, we were ranked fourth, over 5 years, fifth, over 7 years, seventh, and over 10 years, eighth. So really very strong long-term performance for the MySuper Balanced option. The next slide, which I'm hoping registers, it does. The next slide shows our pre-mixed and single asset class options performance over the last 10 years. As you can see, over the long term, you've been paid for taking risk. So that sort of the more growthy investment options have delivered quite good returns over the 10 years. And in fact, up to 3 years. Fell away a bit last year because of the pandemic. So really strong performance there. There's a couple of outliers, which I want to refer to. The Australian equities option did a negative 4.06% for the year, which was really just a reflection of the Australian stock market coming off because of the pandemic. And the sustainable balanced option underperformed as well at minus 1.3% for the year. As you can see, for over the 3 years, it did 5.3%, which was quite good, relatively speaking. The reason for the sustainable balanced option performance last year pretty much came down to the fact that it was in all the indexes. That's the way we invest. It's passive investment, and we didn't have as much exposure to the tech sector as we did in the MySuper option. We're also looking at the asset allocation for the sustainable balanced option at the moment and reflecting on the extent to which we invest in bonds over the period ahead. There's a bit of work to be done there, but overall, very good performance. I think you'll agree. In terms of the pension options, I think you've got those on the slide. You do. Once again, pretty much reflects exactly what I've just shown you without the tax imposition in the pension options. So it's not net of tax essentially. So you've done quite well in the pension options. Once again, the Australian equities fell away a bit, and one of the other options fell away a bit too. But overall, quite a strong long-term performance. And in fact, Vision Super's main pension option, the balanced growth option, was #1 in the country last year. So we're really proud of that. I think that's the first for Vision. So it's okay to talk about what we've done, over the last 10 years. We certainly have some benchmark funds that we're most interested in. Just trying to get the clicker to go over. So this slide, this chart shows how we compare with our benchmark funds. So we've taken some really large funds and some medium-sized funds and essentially compared our investment performance with theirs over a 20-year period. Now, Vision Super is on the extreme right of the chart, and you can see over 20 years we were the 13th top performer in the market. Over 10 years, the 8th, 5 years, 5th, 3 years 4th, and 1 year, as I said, 3rd best in the country. Over the quarter, we were 8th. So pretty good, strong long-term performance. You can see some other funds that have done very well there. UniSuper has been a good performer. Australian Super has been a very good performer as well. Dropped away a little bit last year. But there's other funds in there with 5, 10 times our money who have underperformed Vision Super. So we are doing something right at Vision. I won't go through all the detail there, but I think hopefully you'll agree we've had pretty consistent, strong long-term performance. Okay, now I'll try and get to the next slide. I've managed it. So the next slide really shows our funding performance or the funding health of our main defined benefit plan, LASF. This is the plan where the vast majority of local government workers and water industry workers, library workers, cemetery workers, etc., are invested in if they're in the defined benefit plan. Essentially, defined benefits, for those that don't know, pay a promised benefit based on years of service and salary. And the employer sponsors are essentially on risk for the plan. So the vested benefit index referred to there in the chart is a measure of our ability to pay all benefits to all members on the same day if they left on that same day. Highly unlikely scenario, but it's essentially a prudential measure that we're required to use. And so in doing so, at the end of June 2020, our vested benefit index was 104.6%. So above the 100% that's required to be funded at the end of a financial year. We've got Matthew with us in the audience. He did the actuarial work to establish that number. So you may remember during the GFC, we had a pretty rough time on the vested benefit index. It came down to around about 77% at one point. And we're quite pleased that even though we've had the pandemic, we held on to reasonably healthy VBI numbers. We put that down to bespoke asset allocations for the defined benefit plans, and indeed monetization of some option strategies we put in place in 2015 to protect us in the event of big shakeouts in markets. So we monetized those options, and that translated into about $70-odd million worth of funds for the plan, and around about an additional 3% on the VBI. That's some of the sort of mechanisms around the DB plan. We have two other DB plans, the City of Melbourne and Parks Victoria. City of Melbourne plan has been completely de-risked and is now essentially in cash instruments, and the VBIs are at about 135, 136%, and Parks Victoria is sitting about 109%. So, pretty strong funding. And as I said, we've adopted bespoke asset allocations for all three defined benefit plans. Quickly moving on, I won't dwell on this slide too much, but this slide essentially shows our ability to control costs. I think we've done a pretty good job of that in the last 4 or 5 years. We were spending $30-odd million on operations. The administration, investment team, the call center, etc., and all our platforms. It was costing us around about $30 million. We introduced a new platform in 2015, and as a result of that, really embedded some critical efficiencies into the business and managed to pull some costs out. So now we're running around about $24-25 million a year. For a sort of $10.5 billion fund, we think that's pretty reasonable. And some evidence of that, if I can get to the slide, some evidence of that really is shown through our ability to reduce member fees in the last few years. In fact, we've reduced fees 3 times in 3 years. So our total current fee on a $50,000 balance is $463. The average industry fund is $646 per annum. So we've managed to get down those fees for the MySuper Super Saver members by $75 per annum, around about 14% over the 3 years. Vision Personal is the lowest cost personal product in the market, according to Super Ratings. That fund charges $223 to manage $50,000. Again, a lot lower than the industry average. And the pension option is also lower than the industry average, $490 plays $718 per annum. And as I said, we've managed to get all those products down in price via a fairly relentless focus on costs and efficiency. There's always more to do, but we think we've made a reasonable job of it so far. Okay, if I can move on just quickly because I'm conscious of time. I mentioned last year we had a few new products in the pipeline. We've introduced gold as a portfolio asset class just recently. We've got Pension Join Online, which allows members to segue into pension from their accumulation product fairly seamlessly online. And we're just about to open up a property and an infrastructure option for members interested. That's certainly not advice, but it will be available to members. Okay, on a more frivolous note, really, we don't spend a lot of time chasing industry awards. I think Super's delivers out more awards than the film industry, so we don't really try to elicit them. But we did win one this year, and that was the Money Magazine Best of the Best award for the cheapest superannuation platform in the country, which we're pretty proud of, seeing as we've been targeting cost efficiency. Just quickly, because we are sort of running out of time, global warming is a real challenge. At Vision Super, we think the science is clear. Fire seasons are getting worse, the permafrost is melting, glaciers and ice caps are retreating. We really are seeing the effects of climate change. So what are we doing about it? Well, as I said, because we think it's real, we think a lot of markets, a lot of governments indeed, are underestimating the impact of climate change. So we've started divesting from thermal coal and tar sands, two of the worst contributors to climate change. And we certainly are looking at our net zero position and some timelines around that in the next few months, in the next 12 months. Okay, some other evidence of our sustainability credentials comes from the fact that the UNPRI rate us as A+ across most dimensions. We're in the UNPRI's signatories leader group. We've also been noted by the Centre for Corporate Responsibility in their report, Vote Like You Mean It, one of the few funds that actually does support shareholder resolutions around ESG. Every vote we take, we disclose on our website, and we're one of only 11 funds to do that out of the top 50. So we're doing what we can as a fund to respond to the threat from climate change. There's always more to do, but we've made a really good start, we think. Some other evidence of that, just quickly, we co-filed a resolution at the BHP AGM last year calling for them to suspend membership of some associations that lobby against the Paris Agreement to limit climate change. Whilst the resolution didn't get up, we got an awful lot of support. Support from investors who collectively held $12.3 trillion. So pretty remarkable to be able to do that. Okay, rapidly moving on. There's a lot of focus on the environment and governance when it comes to superannuation. But what we see less of is focus on social factors in the workplace. So I mentioned last time we met that we were working on an index that would help us understand social risks in companies that we invest in. So we've now developed a reference design for social indicators and a machine learning tool designed to make reducing S indicators possible. So we're closing in on that project. There's still a fair bit of work to do, but we are making significant progress. I certainly hope by the time we get to the annual members meeting next year, I'll be able to report we've actually got those indicators in full. As Jeff mentioned, we aim to inform and educate our members. This infographic shows some evidence of the same. So we took and made 66,000 odd phone calls. We had nearly 2,500 planning meetings. Around about 7,400 members joined the app up until the end of June last year. I think there's been a further 1,500 joined since. Members pretty much trust us, as I said. Trust levels around about 86%. We'd like that to be 100. So there's a bit more work to do. In terms of easy to deal with, around about 92%, and member satisfaction is around about 8.83 out of 10, sorry. Okay, I'll sort of rapidly close now, if I can get the slide to work. So what's planned for next year? Given we've had this COVID pandemic for the last 7 or 8 months, we're really just going to stick to our knitting in the next 12 months and continue to focus on delivering strong risk-adjusted returns, as Jeff said. I'll now hand over to Casey, who's the chair of the audit committee, who's going to take you through the audit process this year. Thanks very much.
Thanks, Stephen. Good evening. Hi to all my fellow Vision Super members. As was mentioned, my name is Casey Nunn. I've been on the Vision Super board for a little over 3 years, nominated by the Australian Services Union as a member rep. And I have the great honour of chairing our audit committee. The role of the audit committee is to provide an objective, non-executive review of the effectiveness of our super funds financial reporting and our audit arrangements. We review and appraise the internal and external audit, as well as our tax function. We monitor the full triennial review of our 3 defined benefit subplans that was being previously mentioned, and we do an annual service review into our custodian. We provide an open avenue of communication with internal and external auditors, taxation advisors, management, and the board. And as part of this, our internal auditors, PwC Australia, and our external auditors, EY, attend all of our meetings and regularly report to the committee and myself as chair. The Audit Committee has met 4 times throughout the previous financial year and 2 additional times since then. And as has been mentioned, it's been a really difficult year with COVID, which has impacted all of us. Sadly, many members have been affected in lots of ways, not only in illnesses, but in terms of loss of income and the mental health burden. And so, of course, at Vision, we're conscious of the impact on our members. But the virus has also had a really big impact on the global economy, in investment markets, mainly in equities, debt and commodity markets. So because of this, management have undertaken a few additional tasks to ensure that us as the trustee are satisfied with the accuracy of our financial statements. We have updated our economic outlook, reviewed the external market communications, we've reviewed public forecasts, and we've conducted several internal processes to ensure consistency in the application of the COVID valuations right across all of our asset classes. The committee and the board have spent a great deal of time reviewing the valuations of our unlisted assets, including considering a number of out-of-cycle valuations to factor in the impact of COVID. We really wanted to make sure that these valuations were as accurate as possible and represented the actual value that these assets have for you, our members. It was an in-depth process, and we, as the trustee and our auditors, concluded that the valuations are as accurate as possible. And so Vision Super has never had a qualified audit. We've only ever had the highest level of accreditation that auditors can give us, which is an unqualified audit. And I'm really happy to report to members tonight that once again in 2020, our auditors have signed off on an unqualified audit. All of the detailed financial statements will of course be available to you, our members, in our annual report, which will be up on our website next week. The financial year now will see our audit committee focus on our work plan and making sure we tick off and do all the work that's required of us. And this will involve the ongoing monitoring of the impact of COVID on our portfolio. We'll do a review into the performance of our key service providers and the annual financial position of our defined benefit sub-plans as of 30 June 2021. I really want to thank all the members of the audit committee for their real attention to detail. Our audit meetings are long and thorough, as they should be, and the members of the committee have a real passion for this area, which is great. I want to thank our partners and staff of the internal auditors PwC and our external auditors EY. And I'll also like to pay mention to the Vision Super staff who are really passionate about audit as well, in particular our Chief Financial Officer, Noel, and all the committee who have really worked tirelessly throughout the year. Lastly, I'll take this opportunity just to thank you for your attention and interest in our fund. I really want to wish you and your family, a safe 2020 for the rest of the year, and hopefully a more successful and prosperous 2021. I'll now hand over to Jo Dawson, who chairs our investment committee. Thank you very much.
Thanks, Casey. Hello, everyone. My name is Jo Dawson. I am an independent director on the board of Vision Super, and that means that I am not an employee representative or an employer representative. I have been elected to the board by the board itself. I joined the board in 2014, and I'm currently also the chair of our investment committee. Investment committee's had a very busy year dealing with extremely volatile investment markets, which have arisen due to all the global economic uncertainty that has occurred due to COVID. The role of the investment committee is to assist the board in its implementation of our investment governance policy and framework. This includes the development of selection, management, monitoring, and determining the investments and the investment managers to implement our investment strategy. This year, we've been monitoring things even more closely than normal, steering the fund's investments through the pandemic. The pandemic resulted in one of the sharpest falls in stock markets around the world that we have seen in decades. Governments around the world responded to this through the implementation of massive stimulus packages, dwarfing anything that we saw during the 2008 global financial crisis. However, it wasn't all downside. Technology stocks benefited greatly from the shift to the online world as the pandemic and lockdowns took hold globally. Our members benefited from our exposure to these technology stocks in many of our pre-mixed options, as well as in our international shares option and our innovation and disruption option. We were also able to take some evasive action to avoid the worst of the market downfalls in March. Thanks to the decisive action of management, as well as markets recovering some of their losses before the end of June, nearly all of Vision Super's investment options were positive for the year. And the default balanced growth option, where most people have their money invested, achieved its 11th successive year of a positive return. I'll now hand over to Michael Wish, who has had a big hand in achieving the results that we have achieved this year. Michael is our Chief Investment Officer and now our Deputy CEO. He will take you through the investment outlook. Thanks very much, Michael.
Thank you, Jo. And look, I just wanted to say at the start, I'm disappointed I can't see you all in person. I've done a few of these annual member meetings and I've really enjoyed them. I've really enjoyed the interaction with the members, and this is one of those occasions where I really feel the difference in having a Zoom meeting and not being able to see people in person. And I'd also like to thank especially the Melbourne members listening in. It's been a pretty tough time. I hope you're all okay. You know, it's a nice day. We just got out of lockdown, and really appreciate you listening to what we've got to say today. So I'll move on. My first slide really is the topic du jour, the US federal election. Mercifully, it'll be, at least the voting part of it will be over by next week. What does it mean for markets? That's the first thing. And the short answer is it doesn't actually mean a hell of a lot, at least in the short term. So if we get a Republicans victory, we're likely to see no tax hikes, but we're also not likely to see a big stimulus package. With the Democrats, it'll be the reverse. So we probably will get tax hikes, but there'll be a bigger stimulus package. So there's things the markets will like and the markets won't like. Longer term, there will be ramifications from who gets into power next time. If we get a gridlock, there'll probably be a small stimulus package and probably little in the way of tax hikes as well. But longer term, what we'll see is with the Republicans returned, it'll be more of the same, really. We'll see more chaos, really, in foreign policy. There'll be no action on climate, that, as Stephen's already mentioned, is already having an impact. We've seen that in Australia. It will continue to have an increasing impact worldwide. We'll see a further fracturing of the global alliance, the US alliance, if you like, with the Europeans. But whoever wins the election in the United States, what we are likely to see is continued political tensions. This is a great power contest between China, a rising power, and the United States, the preeminent power today. We are stuck in the middle, as we know. We've already seen the Chinese put tariffs upon us. You know, I don't think we're going to see the end of that. We're really in quite a difficult spot there between the two. And they'll do it different ways, but the Democrats and the Republicans would both continue to prosecute this rivalry with China, and we'll likely continue to see, as we see in the chart here, continued deglobalisation. So we really saw trade peak around the time of the GFC, and it's come down a little bit since. We're not likely to see that make new highs. Countries are going to have to make a decision on where they stand, on whose side in this struggle. We may see, with a Republican victory, we may actually see tariffs on Europeans as well. President Trump has threatened auto tariffs on the Europeans, and it is a favourite mechanism of his. So We will see, I think, continued tensions. Taiwan is a likely hotspot in all that, given China's long-term desire to have Taiwan back in the Chinese empire. So just moving on, we'll talk a little bit about the pandemic. Joe gave you a high-level overview of what happened. It was pretty extraordinary. The just how quickly everything happened, how quickly markets reacted, and how quickly governments reacted. And I'll talk about that a bit in the next slide. In terms of vaccine, I think we've got to be a little bit careful with a vaccine. It will happen. I think it's very, very likely. There are a lot of drugs in phase 3, which by that point, they're very likely to actually make it onto the market. But there are a lot of things we don't know about the vaccine. We don't know how well it will work in different age groups. We don't know whether it'll protect against infection or merely that it'll just reduce the severity of the disease. We don't know how often we might have to get re-inoculated. We also don't know how it'll get rolled out. So all these things are unknown. There's a lot of logistical difficulties. We're not sure who's going to take it, when it'll be ready. So it's certainly not going to be the end of the story, but hopefully it'll be at the beginning of the end of the story. But we will continue, this thing's not going away anytime soon. We're going to continue to see issues around COVID for some time. And I noticed the third coronavirus we've had this century. Clearly it's been the one that's impacted us most, but it is a sign that we may well see more. At the moment we're sort of batting once every 7 years or so. Chances are we're going to see another one sometime in the next decade. Hopefully not as bad. So just moving on. So just in terms of fiscal stimulus, so I talked about just how big that stimulus has been this time. And you can see on these charts on the right, the stimulus in 2008 in various countries, and the stimulus in 2020. And the stimulus in 2020, it just dwarfs the stimulus we saw in 2008. It is quite incredible how quickly governments reacted. And central banks as well reacted very quickly, cutting rates, providing liquidity to markets. So as a result, the market fall, while it was around nearly 40%, it actually was only about a month that we had that fall for before they started bouncing back with all the stimulus and central bank support we saw in markets after that. And Australia's not on that chart, but we were one of the bigger injectors of stimulus in the period. On the left-hand side of that chart, you can see just bankruptcies where they've gone. And because there's been so much stimulus to date, we really haven't seen a lot in the way of bankruptcies. We have seen banks tighten credit standards, but the reality is banks are pretty well capitalised. They're not the risk they were in the GFC. So on that side, things are looking pretty good. But governments are thinking about how much debt they're incurring and how they're going to reduce that. And that is where the risk comes in. If they reduce too quickly, then we will see potentially a dip back into recession. Whatever they do, it's very difficult to target individual businesses. There's businesses that are going now that will not survive. But on the positive side, we have seen quite a lot of innovation as well. So if you look at the formation of new businesses in the United States, it's up something like 20% year on year as compared to last year. I don't have those figures in Australia. Hopefully our business creation's up as well. But these sort of events, this sort of disruption, one of the benefits, one of the silver linings, if you like, is that you do get a lot of innovation. And that's one of the reasons why we've seen tech do so well in this calendar year. It's been quite extraordinary how well it has done. So where are the markets today? what are they saying? What they're really saying is that we're not getting any inflation for decades, really, and that this is across countries. Now, this is how they're pricing things, and part of this is central banks. So central banks have increasingly intervened to keep their long bonds at low levels. But the reality is what the market's saying is we're not going to get inflation. Rates are going to stay very low for a long time. They're very low right now because central banks are not going to need to raise rates. Now, that may be true or not, but certainly we know that central banks today are saying we're not contemplating raising interest rates. So that is sort of good, but it also means that with low rates, everything's priced off a very low risk-free rate, as we call it. So most asset classes price off bonds, government bonds, and they're pricing off something that's very low at the moment. So when we look forward for the next 10 years, and it's hard to say what's going to happen, but we're not expecting the same sort of returns that we saw for the 10 years up to the pandemic breaking out in the early part of this year. What the markets are also saying, and really where we get to, is there is no alternative, TINA as it's abbreviated to equity. So we've seen very, very strong technology returns, but returns outside of healthcare and technology haven't been as strong. And in fact, when you look at, we have different styles here. We have sort of old economy and new economy companies in the market. When you look at the old economy markets, their discount to the new economy companies has been as wide as it's been, in history. So there's a lot of companies out there that actually look pretty reasonable, particularly outside the United States, which dominates the technology sector. We've done very well out of it. But if we do at some point see interest rates rise, we will see, we most likely will see some of those beaten up stocks do better. So it's certainly not all bad news, and you get a decent premium for investing in equities over bonds today, looking out. So just moving on from that, this is a bit more speculation. So we've talked a bit about technology, and some of these technology stocks now are enormous. I think Apple's now something like 4% of the global market by itself, which is just astounding that it's that big. They are vulnerable, but they are doing very well. It is backed up by very strong earnings growth, and the pandemic has really accelerated that. They might give some of that up, but really, we're not going to get back to where we were pre-pandemic. A lot of people, a lot of countries where there wasn't much online shopping, it went through the roof. Particularly Italy, I think, went from low single digits to it was 20, 30, 40% at one point. And so people got used to that. We're not going back to where we were. I've put biodiversity in here because it is collapsing, and this goes back partly to Stephen's points about climate change. This is another element where we're slightly increasing effects. The OECD already estimates that we lose globally somewhere between US 10 trillion and 30 trillion a year because of the decline in biodiversity. So it is a real issue. Demographics is another one. We have got ageing societies that will change how markets behave and what does well over the next 10, 20 years. That's a very slow moving measure, but increasingly it's having an impact on markets. Healthcare's expanding, for example. So they're things we have to contend with and think about looking forward. Certainly not all doom and gloom, but there are some issues as we look forward for the next 10 years. I think I'll leave it there and hand over to the chair of our GRAC and Remuneration Committee, Graham. Thanks. Thank you.
Thank you, Michael, and hello, everybody. I'm Graham Sherry. I've been a director of Vision since 2002, having been nominated by the Victorian Chamber of Commerce and Industry. I chair both the Governance, Risk and Appointments Committee and the Remuneration Committee. And before I give a report on each of those committees, a brief report I might add, before I do that, I'd like to acknowledge the contribution made by Rob Spence and support Jeff's comments about the work that Rob did. And Rob in particular was instrumental in causing the separation of the risk and audit functions just over 12 months ago into a separate risk committee. So thank you, Rob, for all the work that you've done for the members over many years. The Governance, Risk and Appointments Committee assists the board in providing an objective review of the effectiveness of the fund's governance and risk management frameworks, including the risk appetite and risk culture. We've done a lot to firm up the risk culture of the fund in recent times. The committee has had particular focus on improving the internal function to be able to keep pace with the continued changes in legislation and regulation. The fund appointed Chief Risk Officer Nikki Schimmel about 12 months ago, and the team has really solidified under her leadership. We have a great focus and a great capacity to deal with risk, a better focus and greater capacity to deal with risk now than we've ever had in the past. The second committee I chair is the Remuneration Committee, which was set up by the board to review the effectiveness of the fund's remuneration structure and policy, as well as to assess our compliance with the relevant prudential standards and make recommendations to the board each year on remuneration. Vision Super's policy uses a survey put out by the Financial Institutions Remuneration Group, FIRG, to set its remuneration. Our policy states that remuneration for our executive team should be within 15% of the FIRG median. Despite Vision Super having a successful year, the board and the executive all felt that given the economic circumstances arising from the pandemic and knowing a lot of our members would be affected, it wouldn't be appropriate for us to take any pay rises this year. Consequently, there have been no general increases, and only one executive has been given an uplift because they were outside the 15% limit set by the policy. That's a very brief summary of both of these committees. I'd welcome questions later. And in the meantime, I'd like to hand over to Peter Gebbett, the chairman of our Benefits Committee.
Thank you, Graham. Hello, everyone. I'm Peter Gebbett. I've been on the Vision board since August 2018. I was nominated by the Australian Services Union. I chair the Benefits Committee. The committee consists of the board in fulfilling its governance responsibilities and oversight of the insurance management framework. The main thing the committee does is act as an independent, objective third party to assess insurance benefit payments to members and their dependents. We have regular meetings to look at claims. Last year, we also held a number of special meetings to oversee the management work on the contract renewal for our members' insurance with MLC. Vision Super doesn't make a profit from members' insurance benefits. It's important to note that there may be claims for the last year where the members have become unwell or been injured, but they are yet to put in a claim. I'll just click forward here. Not going. Someone click that, please. Over the last year, we took in around 10 million in income protection premiums and paid out just over 6 million in claims. Over the years, members paid 9.5 million in death and total and permanent disability premiums, and we paid out just over 6.4 million in claims. We had a total of 330 claims last year. You can see the breakup on the screen. We approved 96% of income protection claims, 97% of death claims, and 87% of TPD claims. Like Stephen said earlier, we aim to pay genuine claims from members where they have cover with us. Insurance in super is hugely important. It's one of those things where you might never think about it until you need it. But when you need it, you really need it. I'd encourage you all to check your cover, make sure it meets your needs, and talk to the great team at Vision Super if you need help. And we're very happy to answer any questions next in the segment coming up after this. I'll now hand over to Sean.
Very much, Peter. And as Jeff mentioned earlier, we've now got an opportunity to take questions. The whole panel that have presented today and also other executives or our guests in our auditor and actuary are on site online to take some questions. I will just mention that we've had 70 plus questions, those that have come through tonight and also those that were submitted on registration. I don't think we'll get to all of them, but we will come back to members individually, and they'll also be available in the minutes, which will go onto our website in the coming weeks. I might start with a question that we received on registration from Steve. This is for our CEO, Stephen Rowe. Is Vision Super considering any mergers or acquisitions with other funds?
Thanks, Sean. Look, we think there are benefits from scale, or certainly can be benefits from scale, but it's not axiomatic. You know, some of the very largest funds, as we saw earlier, are not performing as well as some funds like us. So we need to be incredibly careful in the analysis process. The board adopted some merger guidelines and some principles, and indeed criteria, through which to assess merger opportunities. And we are talking to some funds, seriously talking to funds about merger. Nothing's eventuated yet, but we'll certainly keep members informed should anything do so.
Thanks, Stephen. Another question from Jenny, who submitted it online when she registered. One for you, Michael. What progress has been made this year to reduce investment in fossil fuels?
Yes, so we have, as at the middle of the year, we have divested from tar sands and thermal coal. We regard this as a journey, and what we really want to be focused on, what counts actually, is the amount of emissions that are going into the atmosphere, so greenhouse gas equivalent CO2 emissions. Unfortunately, when you look at that, they continue to go up. Because of the pandemic, they're not quite as high as last year. But the reality is that every year we put more emissions into the atmosphere. If anything, the rate of putting CO2, if you look at Australia, up until last year was increased after the ETS, the carbon tax came off, and it's been pretty flat but high in the last 4 or 5 years. So what we say is we've got a lot of work to do. We're doing what we can. We filed that resolution last year at BHP. Sad to say, not all superannuation funds voted in favour of that resolution, which was basically they didn't fund lobby groups that were acting against the Paris Accord. We do have a problem in this country with a very large fossil fuel lobby, and you know, we really do need to somehow get around that, but it's been quite difficult. We continue to work on this, continue to think of ways we can to do more. One good thing about the BHP resolution is we've made really good contacts with a number of European funds, and hopefully we'll be doing more work with them in future.
Thanks, Michael. I'll just respond to Tony, which is getting a fair bit of traction online. Tony responded to a comment in the presentation that Zoom meetings make it easier for our regional members to attend. Tony, thanks for the feedback. We did stream the AAM last year. We'll continue to stream in the future. But at the same time, we do love the opportunity to stand in front of members and talk to them and get their feedback. And it's one of the reasons we're committed to servicing both the regions and Metro Melbourne. So it's a commitment the fund has. It's a commitment that we'll stand by, and I'm sure you'll see more of us in the future, and the AAMs will continue to be streamed. So another question, and Stephen, I'll go to you again. It's from Ronald. He submitted this when he registered. Why can't we have a range of investment options that include multiple ETFs or term deposits that suit our financial goals and risk tolerances?
Thanks for that question, Sean. Look, we, as you know, we do introduce new options from time to time, but the suite is, we think, sufficient at this point. We did have a look at ETFs and term deposits, but we found the costs of introducing them were quite excessive and the likely take-up was probably going to be too small. So we sort of moved away from that. We do have the Vision Personal Sustainable Balance product, which is essentially EFTs and passive exposure. So members could elect to join that. And members can also look to get financial advice to assist them to sort of meet their goals if they want to mix and match some of the pre-mixed and single sector asset class options that we do offer at the moment. But at this stage, we're not heading down that track.
Thanks, Stephen. Michael, we're going to come back to you. One of the ones that's been asked online from Barry and has got some likes. What is Vision Super's position to the current proposal that company AGMs continue as virtual online only in the future? Will Vision Super make a submission?
I'm not sure we'll make a submission. What I would say is we haven't discussed it as a position, but I'm against it. Our proxy advisor, the Australian Council of Superannuation Investors, is against it. They represent, hundreds of billions of dollars of superannuation fund money. So there will certainly be lobbying against just having virtual AGMs. Look, just on the last point, one thing I forgot to say was that we have made an investment in a Danish renewable energy company, and that may actually, it has its foot on a wind farm off Gippsland, a massive wind farm that would be great for jobs in that area and would be, I think, a great initiative for Australia. At the moment, that can't be built. There's no federal legislation allowing that, but should that go ahead at some point, then we should have a stake in that. I'll just make that point.
Fantastic. Thanks, Michael. Stephen, we'll go back to you. We've had a question around the federal budget. Wendy submitted it when registering. What is the impact of the recent October federal budget on superannuation and Vision Super?
Thanks, Sean. So look, it's still a bill before Parliament, so it's not legislation yet, but some of the key changes we see potentially arising are, first of all, members being stapled with their existing fund. So at the moment, you move from one company to the next, and you may get invited to join another fund by your employer if they've got a default fund. If this legislation gets up, essentially you'll be with your super fund for life unless you decide to move from that fund. So that's the first potential implication. The next one is the government is intending to produce an interactive online comparison tool so that members can establish whether they're in a well-performed fund or not. So compare their fund with other funds. As we understand it, that interactive tool will only apply to My Super products. A lot of the retail products that have been pretty badly performed for decades are not going to be in that comparison tool, we're told, for at least 12 months. So there seems to be a focus on industry funds and My Super funds, not so much some of the worst performing funds in the country. And we saw some evidence of that arising out of the Royal Commission, where they had a lot of focus on retail funds and very little focus on industry funds. But this legislation is squarely aimed at industry funds, which I think says a little bit about the government's focus. And where a fund is underperforming in the first year of this new regime, they will have to notify their members that they're an underperforming fund. That's in the first year. If they're underperforming for a second year, they'll have to write to their members and tell them they can't accept new members. So pretty significant potential changes to the sector. There was a final piece to the puzzle. The government's trying to introduce an obligation on trustees to act in members' best financial interests. At the moment, it's just around best interests. which we've always taken to be best financial interests. But there's that little nuance in there, and we're wondering, we're sort of speculating as to why that's come in. And it might be aimed at some of the funds that do focus on climate change in their investment process, but we're not sure about that. So essentially 4 pretty significant changes, particularly for funds that are underperforming and funds like ourselves that rely on default fund flows of members.
Thanks, Stephen. One of the other questions that we received from Karen that I'll take is, what will the impact of the superannuation guarantee not increasing to 12% be? For those listening, the superannuation guarantee are the contributions that come in via your employer. The current rate is 9.5%. It's currently legislated to increase to 12% by 2025, but there's been a fair bit of media around that increase being delayed. There was some expectation that that would happen in this year's federal budget, but remembering we do have a federal budget in May before this increase is due to occur, so from 9.5 to 10. To demonstrate, we thought the best way to do this was actually give it a live example. So we've taken a typical member, Vision Super, 45-year-old Nicola, with an annual income of $80,000 and a superannuation balance of 95. So if Nicola went through her working life and the superannuation guarantee was frozen, there would be a significant impact, nearly $40,000, so 10% of her final retirement balance. So legislation that we continue to work with our associations on to lobby to ensure that it is put in place. We've just come out of COVID where we've seen members take, 10 and in some instances $20,000 out of their balance, out of their superannuation balance. So again, impacting people being able to have a comfortable retirement. So policy that we think is detrimental to working Australians. And unfortunately, our membership is skewed female. These measures tend to have, more significant impacts on, the gig economy, female workers. So something we're working really hard to ensure that increase does go through. We might go back to an online question, and Michael, I seem to be throwing to you a bit, but this one probably sits with you again. This one's from Carmen. How have you strategically positioned Vision Super to take full advantage and support new, emerging and existing Australian-based industry and manufacturing?
Okay, well, thank you for that question. So we have, the government really has made this quite difficult for us because we've got real regulatory uncertainty. It's quite difficult for us to commit money for any period of time, given that we just don't know what legislation is going to come in. For the early release, for example, there was very little, or there was no consultation with industry. So we have to be very careful. We have made an allocation on the equity side to be deployed into company raising. So that's for listed equity, so listed companies. We're also looking right now at the debt side where companies might be looking for a loan, and we could help make that loan. That's been considered. We have made a decision on that. And one of the, when you do that, your money is locked up for a period of time, and we just have to be sure that we're being prudent, that we've got enough leeway in case any new legislation or regulation comes in. Stephen was talking about the financial best interest. Those things all have an impact on how we think, but we are very keen to do what you're suggesting, and we have started, and we would like to do more.
And Michael, leading on from that, the question that was presented while you're presenting that one, what's the percentage of shares in Australian-owned investments that Vision Super invests in?
So shares across the total fund, and you've got to remember we have, for example, a cash option. There's no shares in that. There's none in the fixed income options, but across the entire fund, there's about 20% of the fund is in Australian shares. So it's a meaningful amount.
Thanks, Michael. Another one that was submitted, Stephen, this one I'll come back to you, that was submitted in the registration from Paul. How much was paid to each of the ASU, MAV or LG Pro over the last financial year?
Well, in terms of marketing and sponsorship agreements, we did make some payments to all those mentioned organisations. The ASU received $43,614 in the financial year to the end of June for marketing and distribution services pursuant to an agreement we've had with them. FinPro received $14,545. Vic Water received $12,500. The MAV $6,000. LG Pro $4,850. For a total of around about $83,000. So the Vision Super doesn't spend multi-millions of dollars on marketing, on TV and radio, in newspapers, etc. Typically we've relied on our sponsors and their distribution networks to grow membership and retain members. And certainly we see that those arrangements as value for money, and they're all governed via the board through clear service level agreements with requirements around targets being met for the funds to be paid over. Thanks, Sean.
Thanks, Stephen. I might take one of the questions that's been asked from someone online. So Sarah's asked the question, as a younger member of Vision Super, could Vision Super hold some webinars with specific information for younger people and super in the near future? Sarah, thanks for the question. It's an area that we look at pretty consistently, but you're entirely right. The audience that engages with the fund the most is the building wealth and ageing demographic. But it is an area through COVID that we've been looking to build significantly more resources and engage with younger members. The team has conducted a significant amount of webinars with a lot of engagement, but an area that we do need to do significantly more work is engaging with our younger members to help them build their wealth. You know, the things that we've spoken about, superannuation guarantee potentially not being increased. We have done a lot of work over the sector to support members of Vision Super and also people working in the industries that we support through additional contribution schemes. And we quite often see higher contribution rates above and beyond the 9.5% than most superannuation funds. So Sarah, look, I think it's a fantastic idea. We'll definitely something we'll look at over the next few months. And if we've got your details, I wouldn't even mind reaching out to, perhaps understand a little bit more what specifically you're looking for. We want to deliver content that's relevant to you and meaningful to you. So we'll try and do that if we can. We might go back to a question that was asked on the registration. Michael, for you, this one. What is Vision Super doing to ensure the companies our super is investing in have adequate female representation on their boards?
Okay, so as I mentioned a little bit earlier, where we get proxy advice, so voting advice from the Australian Council of Superannuation Investors. They have a policy that there should be at least 30% females on board, so 30% female board representation. So effectively under their policy, where there's 0 or 1 female on a board, we will vote against. And there may be other occasions where we're voting against male directors, and that may be the chair of the fund, the chair of the nominations committee, might be long-serving directors. So we do, as a matter of course, vote against companies where we're not seeing good representation. And I have to say, I think representation is really improving. This has been an issue that's got a lot of traction, and we've seen really good improvement in that regard in recent years.
Thanks, Michael. We'll go back to the live questions. Lee has asked, and Stephen, I think this one's for you. I know you spoke about it earlier that gold was introduced into the portfolio, but Lee's asked, how about a new asset class for investments, gold? We currently are in uncharted waters, and what the new normal in the future? We're currently in uncharted waters, and what's the new normal for the future?
So we talked about potentially opening up a single sector gold option last year at the annual members meeting. We spent the last 8 to 9 months working through that question and concluded that we didn't think it was wise at this stage. We've just started investing in gold for the MySuper portfolio. I think we'll see how that goes, and then maybe think again about a single sector option. But once again, we were concerned about the amount of take up and the cost of introducing another single sector option, which would effectively be paid for by the rest of the membership. And we didn't really think there was going to be too much demand for that particular asset class. But if we get indications of significant demand, we'll definitely look at it again, given we're now investing in gold.
Thanks, Stephen. We haven't heard from our Chief Financial Officer this evening, so I'm going to throw to Noel a question. Joseph has asked, what is the impact of the, is the superannuation industry guaranteed by government? And what happens to my money if a super fund collapses?
So the government doesn't guarantee the super industry as such, but we have a number of regulators that look after us, and we have APRA, who is a prudential regulation authority. So their job is to make sure the super industry is working well and working efficiently. Now, APRA can't guarantee that no fund will collapse. But if something did happen, the government has a number of mechanisms that it can introduce in terms of providing some guarantee or form of backing for the members, and that depends on the reasons. They can look at paying out compensation to members, or they could extend the financial assistance package that the banks and insurance companies are covered by. But when you look at the super industry and its performance over the years that it's been operating, there's been very few collapses, even as a starting point, when you look at the GFC and all those sorts of events that have happened over the years. So the government does rely on the regulators to be doing the right thing by the members.
Thanks, Noel. And probably on a relevant theme, I'll come back to you, Noel. How are our super finances going during this difficult time? How is Vision Super coping with the challenges?
We have always had a really strong focus on keeping our costs to a minimum, and making sure we're doing a good job, making sure we are spending our money well. And that's why we've been able to pass fee reductions on to our members because of that focus. With the COVID-19 stuff, it just means that we have just monitored what we've been doing even more closely. And if people go and look at the PDS that we released on the 1st of October, you can see that there's a fee reduction that's been included in that as well. One of the things that we've been very conscious of is the fee disclosure requirements from ASIC. And we are one of the very, very few funds that have actually early adopted the RG97 regulatory requirements in relation to fee disclosures. And with that fee disclosure, what we are required to do is report not just the money or what we're deducting as fees from the members' accounts. We're also meant to disclose any money that's used from the reserves. And effectively, our reserves are stable, and we're doing full disclosure on the total costs that our members see. So we're doing okay from the financial perspective during this time.
Thanks very much, Noel. I know we all tend to use jargon throughout the superannuation industry. Noel referred to PDSs there at one stage. A PDS is a product disclosure statement that gives all the details around the superannuation fund and the product that a member joins. So, if you're ever caught out by the jargon, it's a sector that uses a fair bit of it. Feel free to, refer to our website or ask a question. Stephen, I'm going to return to you. A question that was asked by John when he was registering. What is the best way to manage or track your super returns?
Well, there's a couple of ways you can do it. You can certainly call the call centre, but we'd prefer you to load up the Vision Super app, where you can get details on your balance, your contributions, each and every type of contribution, your insurance cover, your beneficiaries. So it's a very, very user-friendly app. And as I said a bit earlier, I think we've now got about 8,500 members registered for the app. That's one way to do it. Another way is simply to go onto the member portal on the website, which I'm sure you may well be enrolled in already. So a couple of key ways, but you can also pick up the phone if you really want to. But as I said, the app is incredibly user-friendly, and we do encourage people to sign up for it.
Thanks, Stephen. Just mindful now of time. We're nearing the end, so we've probably got time for another few questions. Michael, I'm going to return to you. Les has asked a question online. Do you expect a crash in the stock market in the foreseeable future or any major corrections?
Well, I wish I could foresee them. I didn't foresee the one earlier this year, though we did react fairly early when it got going. What I would say to you is equity markets are volatile. So every 3 years or so, you get a 20% correction. They'll fall 20% peak to trough. And every 5, you'll get 30% or more peak to trough fall. So we will get them. Equity markets are volatile. What we know is that over the longer term, if you look through all that, we're very likely to get a better return than what we got, than what we get out of bonds. I had a slide in there just showing how much equities would have to fall over 10 years for bonds to do better, and it's quite a lot. So yes, we'll get one. We don't know when. Not expecting one now, but it's certainly possible if there's a policy mistake when stimulus comes off coming out of this pandemic. And we'll likely get one in the next few years for whatever reason.
Thanks, Michael. And I'll stay with you, Michael. Anthony at Registering has asked the question, the Investor Group on Climate Change is a collaboration of Australian and New Zealand institutional investors focused on the impact of climate change. The group has existed for several years and contains many of Australia's largest super companies. Why is Vision Super not a member?
So we were a member of that group, and we pulled out of that group because we felt they weren't doing enough and they weren't differentiated from groups like the PRI, the Principles of Responsible Investment Group, the UN formed. Look, to be frank, it's a criticism we have of a lot of Australian superannuation funds. They're not doing enough on this. They talk a good game, but if you look at the voting records, if you look at the engagement, it really hasn't led far enough. We've said to them we would go back if they did more. We're not seeing it. We're just not seeing enough pressure really being put on. The superannuation industry is very large. There's every reason in the world to do this. We need to build an economy for the 21st century, not the 19th. It's not going to be built on coal in the 21st century. It will be good for business, good for innovation, and of course it'll be good for all of us climate-wise. So we pulled out because we didn't feel that they were going hard enough, really, is the reason.
Thanks, Michael. Stephen, one from Sandra as we registered, and I know this product and investment option was something that you were really keen on, so I'll throw this one to you. What sort of business is being invested in at the moment in the innovation and disruption optional sector?
Okay, so the option is essentially managed by Baillie Gifford, which is an Edinburgh-based fund manager, and they pretty much invest in all the major what's called FANG stocks. So Facebook, Amazon, Tencent, Baidu, Netflix, and a range of innovative health companies. They also invest in sort of consumer durables, some of high-end fashion houses, but the vast bulk of their money is in Tesla, Tencent, Baidu, Facebook, really high-tech type companies. So it gives you a bit of a flavour of how we're doing what we're doing there. We've got a pretty big exposure to Baillie Gifford, and as you've seen from the returns in the last few years, it really has been quite amazing. The innovation and disruption option for accumulation members, I think, was 40% last year, 44%. and in the pension option it was 70%. All the stars aligned for the tech companies after the pandemic, and the kick up in valuation for some of those stocks that were invested in was quite remarkable. This second wave that seems to be coming through in Europe and America, and still South America and some parts of Eastern Europe, may mean that sort of momentum carries on, so those tech stocks continue on. But you'd have to think at some point they'll come off. But we've had an incredibly good run from all those names.
Thanks, Stephen. I'll probably go to David's question online. It's probably going to be our last question for this evening. So thank you everyone for participating and submitting your questions. Michael, we'll go to you for the last one. Arts and culture contribute approximately nearly $12 billion to the national economy. How does Vision Super plan to support and invest in the sector to benefit members?
Yeah, it's a good question. And it is a real tragedy what's been happening in the arts and cultural sector, as well as the university sector during this pandemic. It has been difficult. We don't have any direct investment in that now. We don't tend to invest directly. We do have a couple, but we tend to go through managers. They have to stack up. So we have the sole purpose test in super. As Stephen said, we interpret that as being in the best financial interest of members, and that's how the government certainly interprets it. So all I can say to you is that we're open, we'd be open, but it is difficult. When I've looked at these things in the past, it's been quite difficult to make them stack up. There are some funds that invest in super. I think, really what's going to make a difference to that sector is government policy and really the broader economy getting back on its feet. There's not a huge amount I think we're going to be able to do directly, maybe through a debt investment. Maybe that is one way we'll be able to do it, but nothing at the moment springs to mind that we can do. But we're always open and looking for new investment opportunities.
Thanks, Michael. Mindful that we've reached our time, so I just want to confirm a few things. There have been questions that we haven't got around to. All of those will be answered and we'll come back to members directly. Where they're personal questions, one of our member-facing teams will contact you directly. All questions and responses will be made available in the minutes that we will submit on our public website in the coming weeks. But as Casey said, thank you very much for attending tonight. We wish you and your families a safe time, and especially in these really challenging and difficult times in a pandemic. We also wish you a safe and happy lead up to Christmas. Thank you very much for joining. We will be sending out a survey post the event, so we'd love to hear your feedback. We'd love to hear how we can improve this event, and also, from feedback that Sarah made, how can we engage with our members more meaningfully to help them have better retirement outcomes. Thanks very much and enjoy your night.